use the 15 minutes presentation. It will not be that data dumping or death by PowerPoint. I'll be keeping it more interactive, and please feel free to ask any question during the presentation as well, and then I'll be available for the Q&A, followed up by the other sessions we have till tomorrow. So it's all about blockchain. I think these days when we talk about the fintech, it's the blockchain that's the next word come out. And that's where I want to bring in, as Suhail very rightly pointed out, that there is a mist, there is a fog with this word blockchain, and especially with the cryptocurrencies. That's what I will try to clear for the next 15 minutes. So it's the blockchain implication on fintech, ecosystem, and innovation as well. So what's in it for the next 15 minutes in this presentation? We have in ecosystem, there are three players basically. The financial institutions, which includes the banks and exchanges and all that. Then we have government, and then we have tech entrepreneurs. There's something different for each of these stakeholders when we talk about the next 15 minutes. For the regulators in fintech, they have a different application. For the financial institution, they have the application for their operations. And when it comes to the tech entrepreneurs like us, we have to provide you guys solutions, and we can be the bridge between the conventional fintech, or rather the conventional banking and financial institutions, to the contemporary one of the 21st century. That's what's in it. What's not in it is also which I like to clarify. We will not be focusing much on the cryptocurrencies because that's the only one application out of blockchain. I will give the analogy that imagine you have an iPhone and there is app in it. Cryptocurrency is just one app in the iPhone. And there are hundreds of apps we have all in our Note 8, Samsung, or iPhone. So that's how big the blockchain world is. It's not just about the cryptocurrencies. And also we'll not be going into the nuts and bolts of the technology. So this is what we are not going to focus on. Now, the block 2 of this presentation, that is the unlocking blockchain. Since we are going to discuss or talk about, especially I think following speakers as well in the next sessions, they will also highlight this word blockchain. Let's unblock it. Let's discuss it, what it is basically, and only you will be having a good understanding how you can apply it for your operations and as a regulator, as a financial institutions. Einstein once said that if you cannot explain something in easy words, that means you are not understanding that phenomena. And that's what my objective is for the next 15 minutes, that we all have a takeaway, that we understand the blockchain as a blockchain phenomena, not something under a blanket of bitcoins or cryptocurrencies. This is the first thing that we have to, when we have to understand about the blockchain, we have to understand what is the world without blockchain. You all are coming from a fintech or financial institution background. Currently, there are ledgers we are using, and we are using it since ages. That ledger can be of a paper-based, that ledger can be of a digital database, contemporary one. But what is happening with that? It's more a centralized one. Even a paper-based, even like a Citibank, they are keeping all the information centralized. Can replicate it at 5 different nodes, but still it is a centralized one. What's happening is that there is some authorities, there is some institute, which is keeping all the data for the financial transactions, or in other words, any kind of asset transactions. So that's what is the world without blockchain. What it is triggering, it is becoming a honeypot basically for the bees. And who are the bees? Hackers. People with the intention of doing frauds. So they can use or misuse the data, and they can manipulate the data because it is hackable. It is centralized. You just have to target one safe. And imagine when you have to target one safe with one lock, it is easier. But imagine on the other side with the blockchain, if you have to target a safe with probably hundreds of locks, it will be far more difficult to unlock that. That's what blockchain is basically. So blockchain is doing that. It is first of all taking away the intermediary, taking away the centralized authority. That's why it is called decentralized ledger system. technology, DLT. So it is, first of all, we take away the centralized authority, then we distribute those ledgers. I mean to say that ledger, not those ledger. That ledger is the same one, but it is replicated in hundreds of places across the globe. That ledger could be with your laptop, in your mobile, in my mobile, in some central database of Citibank, etc. Anyone can keep it until they are allowed to be in the public blockchain, or if it is another case, it could be a private blockchain. So this is what the first thing we do in the blockchain. We use that ledger and we distribute it among hundreds of participants, so that now hacker has a difficulty. If he has to hack that information from that blockchain, from that particular database or ledger, he has to do it for 200, 300, maybe God knows how many similar ledgers in the system, in the blockchain, which is possible, but commercially not possible for any hacker, because he has to come up with such a big infrastructure that even if he hacks that whole blockchain, commercially it will not be that worthy for them to do so. It is, again, I'm mentioning, it is hackable, but commercially not hackable. That's why till now blockchain has not been hacked. Now, what else happens in the blockchain world? So it becomes so much a big phenomena for all kinds of financial institutions and government as well. Apart from distributed nature of the blockchain, it is also encrypted and connected chain. Sorry, I have a bad throat, so please bear. Once the whole ledgers are connected with each other, they are replicated at a real-time basis, at an efficient level. So it is a very real-time, probably with all blockchains. Bitcoin has its own blockchain. There are other blockchains as well in the world. We only know, most of us only know about the Bitcoin blockchain. Bitcoin blockchain is like updated every 10 minutes. A new block is generated. Once a new block is generated, it is all replicated in among the 7,000 nodes or whatever nodes who are actively participating in that blockchain. So making it one in every place. So this is the connection part. That's why it is called blockchain, because it's all connected. So it starts from the blocks of the information, of the asset value, transactions, and then they are chained, and then they are encrypted. How? Cryptographically. So cryptography is military standard encryption, which is, again, not easily hackable, and that's how the blockchain is giving layers of security to your information, to your exchange of value. So that's how it is done. It is a digital database. It is decentralized. There is no central authority who can claim, I have this blockchain. Yes, they can say, but that will be a private blockchain. It is distributed, it is chained or connected, all of the nodes having the similar kind of information or transactions, consolidated. If there is no consolidation, there is no new addition of the blocks. So block will be added only with the consensus of, for example, we are like around 50 to 100 people here. If we don't all have a consensus that, okay, let's add this new block in the network or in the blockchain, it will not happen. Even one person or one node will be having a disagreement, of course, based on some mathematically algorithms, which will not go into. So that is the consensus. If that happens, it will remain the same. If that doesn't happen, that means there is some malfunction happening in that particular block. So it is well coded, which is I mentioned that it's cryptographically encrypted. For what reason? For traceability, transparency, and trust. That's the reason why blockchain is existing and blockchain is moving and thriving forward. Now, these are the fundamentals of the blockchain. I just mentioned about the P2P network, that peers of ours, we can form the blockchain. Banks can form a blockchain. Governments, they are the peers, again, they can form a blockchain. And then they use the cryptography, they use the timestamping, and they use the distributed technology. These all things were happening before. Blockchain just combined them together. The reason I'm bringing this slide is that blockchain is not the end of the technology. It is going to be evolving, and that's why it is in the immaturity state at the moment. There could be a bigger technology having blockchain as just one of its part, just like P2P networking is one of the part of the blockchain. And there is a possibility that eventually blockchain will become a part of a bigger giant technology which fintech people and governments and other stakeholders will keep on using. Now, types of blockchain, I will keep it very again simple. There are two types of blockchain. One we all know is about the cryptocurrencies. They use public blockchains. Anyone can be part of that blockchain. They can validate the new block as a node, as a miner, and they can also use it for their transactions, exchange, and all of that. On the other side, in the financial world, the other type of blockchain is more popular. That's why I brought this slide, which is called private blockchain, permissioned blockchain. That's pretty much similar to a centralized database that only, like for example, 5 of us or 10 of us or maybe hundreds of us will be able to access the data, access the transactions, do the transactions on that permission blockchain. FinTech world is using that permission blockchain in majority. There's another application they are using which is a cryptocurrency called Ripple, which I'll also share in like coming slides. That they are also using public blockchain as well as an infrastructure, as a platform, which is 4 of them currently are in use, which I'll bring in the coming slides. Block 3. Now, why blockchain is happening in the financial institution or the fintech world? Because of its nature of giant platform of trust. It's all about bringing a trust. As I said, why we keep a central figure between us when we are doing transaction? Because sometimes we don't trust each other. We need some central figure to build up that trust in that transaction or keep the record of that transaction. Banks do that, financial institutions do that, governments do that. Now, blockchain is a such technology that is saying, okay, I as a technology can replace that intermediary, that bank, that financial institution, that exchange house, etc., that government itself. That's why there is a fog about this phenomena that when we talk about it can replace, then the other side resist, which I will again share in a couple of slides after, that it is not always against these intermediaries. It can complement them, and yes, at certain points it will challenge them as well. So the existence of blockchain is all about trust, building up a trust between the parties who are exchanging value, right? So a perfect match or mismatch. Now in the next 2 slides, I'll share where in the fintech world it's a perfect match or mismatch. But before going to that point, again, there are 4 areas where blockchain is bringing the match or mismatch. Which are those? Disintermediation, nature of the blockchain, resilience, integrity, and traceability. What they are doing is they are challenging these intermediaries. If there are some representative here, apologies for that, but that's going to be happening soon. That SWIFT, CCP, FIX, DTC, these people will be facing some challenge with the blockchain technology because that is exactly what blockchain is bringing in. Payment with a trustable platform. Now, where it is helpful is it is going to bring the immutability. You cannot delete any kind of information. Every block which has been generated will remain forever. So that immutability is bringing the transformed role of a central control party. Governments will have a different role now. They will have a lot of ease with the blockchain as a technology when they will regulate the whole ecosystem with blockchain. All the stakeholders on the blockchain, no one can do any kind of a fraud or any kind of a malfunctioning with the data. Their role will be easier. And they need to just come up with the new audit capabilities. When we talk about the transparency and privacy feature of the blockchain, that will lead to the expanded regulatory capabilities. Government will have our regulators in this such case like central banks and central authorities who are taking care of the exchanges. They will have a bigger role and they will have a more regulatory capabilities. Implications for the bank cost of leverage. Banks, when they will be trusting that whosoever they are lending has a proper, legit kind of a collateral their liquidity flow will be far more better in that case. Autonomy feature of the blockchain or distributed ledger infrastructure will bring in the reduced counterparty risk. Just mentioned that if everything is safe, that you can trust the information, that means that you can simply do the operations safely, more securely, and the chances of the risk are less. And lastly, shifting role of intermediating entities. They will remain there. Blockchain in some part of the world, you'll say, okay, they are challenging the intermediaries. I don't believe that. There is a role of intermediaries. If they use blockchain for their good, they have a big role to play. Now, blockchain for the banks, it's a kind of a love-hate story. When blockchain arrived, it was again back in 2009, but it boomed up by 2011, 12, something like that. Initial fear was that they will make the banks and financial institutions as dinosaurs. It's not the case anymore. In fact, now they are one of the best friends of blockchain, and they are the biggest users of this technology. How come? I'll just bring this stat that comes from one of the credible IBM's report of last year, that already 15% of the banks and financial institutions are using blockchain. By 2020, there will be around more 51% adopters will be joining it, and eventually everyone will be, from the financial world, will be using blockchain for their regular operations in some form or other. Some of the use cases I'll discuss in coming slides. This is again from World Economic Forum. Truly in. This slide will be with you, so I'll be keeping it short because of I'll be handing over to the other speakers, and then eventually I'll be available and we can discuss more about this. So there is lot much happening, even again a credible source of a World Economic Forum, which you can see there is a lot happening in the fintech world from the blockchain. Now, enemies become friends. Again, 5 years back, banks and cryptocurrencies were like rivals. Now they're one of the best friends. Banks, financial institutions are using cryptocurrencies, coins, for their services, because now they realize that there is a good side of a blockchain or of cryptocurrencies. These are the 4 cryptocurrencies you can trade, you can use, financial institutions can use them as well. So it's not, the cryptocurrencies are not just a security, they have their digital asset value, which now world is realizing day by day, and they are using it, not just trading it. Ripple is the most popular at the moment, and doing fine as well. Even these days, there is a crunch going on, there's a correction going on in the crypto world, but still Ripple is doing fine. Even today, it is in the green zone. All others are probably in the red zone by now. So it provides the real-time gross settlement system. It is a currency exchange as well, and at the same time, it's a remittance network. There are banks in UAE who are using Ripple, are soon going to use Ripple for their remittance networks, especially with India. ICICI Bank, they are using it. And then there is UAE Exchange, which is using it for the remittance purpose as well, the Ripple's blockchain. Now the block 4, that blockchain takes use cases. In just one slide, again the slides will be with you. So you can see that there is not, I just mentioned about this part, information and value exchange. People are generally considering, those who are having a fair idea about blockchain, they're only considering this as their main use case of blockchain for the financial world. There is a list of use cases and a very, very useful use cases. And yes, contemporary organizations, financial institutions, banks, they are using it. And we can find again on Google, or even after the presentation, we can discuss about other use cases apart from the payment settlements as well. So there is a list, whole range of blockchain uses for the financial world. These are the benefits for the financial institutions or fintech, that assuring the safety, which I already discussed. It will keep the records maintained. Standardization of the data, because all of the governments, all of the financial institutions in different parts of the world, they have their own standards of keeping the data. So once everyone will be on a blockchain, there will be a sort of a standardization of the data. And it prevents the fraud, it provides asset value management, which is the biggest value of the blockchain. and regulatory compliance, because governments are using it, have started using it, the central banks have already started using it to do this practice. Block number 5, and then we will be closing the presentation. That is the blockchain challenges now for the fintech world. We have discussed about the good side, positive side. Let's briefly discuss about what are the challenges for the ecosystem of the fintech. These are the 3 stakeholders: financial institutions, government and regulators, and tech entrepreneurs. For each of them, there are different challenges when it comes to the blockchain as an innovation in fintech world. Number 1 is the regulatory uncertainty. G stands for the government and FI stands for the financial institution. It is hurting these 2 areas mostly. Financial institutions are not like into the mass adaptation because there is no regulation. And regulators are always slow. This is a very, very fast-paced like a technology. Like it's moving rapidly. It is like, it's hard to catch up, literally. For the tech entrepreneurs as well, for governments are always slow. So they are finding it difficult to like catch up with this and bring up the regulations. That's the challenge number 1. Novelty and lack of standardization. Novelty is because it is a new technology, and interoperability between this technology and the legacy technologies. Banks are heavily, like they have invested on their technologies. Hard for them to like move forward for another technology. So they need some interoperational capability from blockchain, which currently is, because it's a novice technology, there is a challenge there. So yes, it is one of the challenge for both government and tech entrepreneurs to come up with interoperability and standardization of the technology part. Because most of the blockchains are different, having a different algorithms, standardization of their like blockchains, patterns. There's a difference between the most of the blockchains. Energy waste, we might have heard about the Bitcoin blockchain is using currently more energy than half of the European continent. So that's a challenge for world to see that how they can use this technology, and at the same time this technology is wasting or using a lot of energy. It's not energy friendly. But yes, again, tech entrepreneurs are coming up with the new friendly, eco-friendly blockchains happening thick and fast, but still it will take like around few years to establish the blockchains with the eco-friendly nature. Bitcoin blanket, that's another big challenge. Most of the world is, when they hear about blockchain, they think it as a Bitcoin sister. It is as a synonymous for Bitcoin, which it is not the case. I just explained you the analogy that it's just one app within your iPhone. One app, there are hundreds of others. So Bitcoin blanket has to come out. In last 1 quarter of 2017, yes, it happened, and gradually it is happening. Slowly and surely, blockchain is coming out of the blanket of the Bitcoin. Heavily forked, it's a bit of a technical term. Tech entrepreneurs have to are facing this challenge that every now and then we are seeing some like forked blockchain, which is that there is an existing blockchain, and within that blockchain, some since there is no control, it's decentralized, and some of the entrepreneurs think, okay, we can come up with a better version of this blockchain. And we saw Bitcoin becoming Bitcoin Cash and Bitcoin Gold and all others like Ethereum, also the famous blockchain. They are also getting into the fork situation. So this is what the tech entrepreneurs have to take care of as a challenge. This belongs to everyone. Bubble burst. Like with every booming technology, there is like a bubble burst. And we are expecting that there will be a bubble burst for the blockchain technology as well. Governments are like taking care of that side, because at the moment it's like a buzzword, blockchain or cryptocurrencies. Without much regulations, everyone is jumping on the board. And so many fake ICOs or companies are coming in and bringing a bad name to this technology. That needs to be filtered out. So the bubble is required to be burst. It's not that we are afraid of it, and being like a evangelist of a blockchain, I believe it's a need of blockchain. in 2018, if not soon, by the Q3, Q4, we need a bubble burst so that filtered out professionals, filtered out regulators, ICOs will remain and bring value to this blockchain world. I'll again go back into the history. If we see, by 1999, there were a lot of dot-com companies appearing thick and fast on a daily basis. By 2000, there was a bubble burst, and followed up, all of the big names of virtual world, or the dot-coms, we are seeing are from post-bubble burst era. Facebook, Airbnb, the real applications. What happened before, from 1992 to 1999, there were like every day a new startup is coming and bringing up the dot-com application. But they were not that valuable. Once the bubble burst happened, the investments were like critical, and they only filtered out professionals remained in the game. And they brought up the concept of a social networking, brought up the concept of a shared economy, which we all are using, and we can't live without it. So that's what the blockchain needs now, probably within this year, to have a bubble burst, and then followed up, there will be filtered professionals who will bring up the filtered and right value for the overall phenomena of the blockchain. One big misconception, which Sohail just mentioned, that there is a misconception about the blockchain, is that people consider it 80% as a technology and 20% as a business process, or change in a business process or economy. It is absolutely the other way around. It is 80% a mindset change, because decentralized in the nature. People have to come out of the centralized nature of business processes. It's a decentralized one. And at the same time, yes, it is based on the technology, so there's a role of a technology for 20% and 80% mindset shift, economic shift, and plus business process change. So that's what you have to change the angle of seeing blockchain, not as a technology, but as a change in business processes. Lastly, we'll just chain out the whole blocks, which we just saw, the 5 of them. Our first block was orientation. Then we saw some applications, the FinTech ecosystem. Why blockchain is happening, where it is going forward, some blockchain challenges, and strategic implementation, that it is 80% a set of mindset change, business process change, so not just a technology. Blockchain is not a problem which is looking for a solution. In fact, it is the solution which is looking for problems to solve. It's that big. And lastly, I will say that blockchain is magical, but it requires some genie like you, coming from the FinTech world, like us, coming from the tech world, like regulators, like Dubai. It requires some Aladdins to just rub the magic lamp of blockchain and bring out the best of this technology. Thank you very much.